The biggest question that many people ask is, how did Singapore become so rich? Their GDP per capita around 60,000 US dollars, which is more than USA and more than most European countries. But it was a very third world country in 1960s, and then suddenly something happened and they made a meteoric rise, and today they are a very well in a first class first world country. So how did what did they do it right to become so rich? So some people say, well, they studied English. I don't buy that, because like if you take Caribbean countries, if you take Caribbean countries like Jamaica and all that, their first language is English, but they're not that rich. So there has to be something else. Now, if you look at, these are the new photos. These are the old photos of Singapore. Now, if you go here, that's a video, and so basically you could see the old Singapore is very much a third world country, and there are streets here crowded. So there's nothing to differentiate Singapore from rest of the world or rest of the third world countries. This photo probably around early 1900s. But today it's a whole different situation. This looks like easily these streets looks easy, could be one in Europe. And so today there's vast development in the country. We can see that. So how did this happen? So in this video cast, I'm going to give bunch of reasons. Now I may not capture all the reasons. I'm going to give bunch of them and see what happens. So, and then I want to say that no country is going to stay rich forever. 50 years from now, who knows? Singapore may be, may not be one of the rich countries. We don't know that. 100 years from now, who knows? Normally these things change. There was Egypt. Ancient times, they were the richest of pharaohs, but today, it's a very poor country. Same thing with the Romans. They control a whole lot of land and richest country, but today not so much. And the Mongolians, I could go on and on. So these things change. They recycle. One country comes to the prominence, another country goes to the back. So that's normal. World order, change. So first, let's look at GDP comparison between Sri Lanka and Singapore. So let me try to center this. So this is a good YouTube video by someone named some Asian, and you could see the green is Sri Lanka, the GDP growth, and yellow is Singapore. And probably like 1985, they started to break away. So remember that year, 1985. And this is not realistic way to look at it, because Sri Lanka has 20 million people. So the GDP of Sri Lanka should be 4 times that of Singapore. So this is not a realistic way to look at it, but it's a comparison, raw GDP to raw GDP, without regard to the people, number of people, because Singapore has only 5 million people. Sri Lanka has 20 million people. And as you could see, by 1995, 97, they're breaking away really fast. They're breaking away fast. And this is the time period that Sri Lanka had a major war with LTTE. There was no time to think of investments, capital markets, nothing. So there was this major war, and when Singapore keep piling up their GDPs, and while Sri Lanka is lagging here. And as you could see, 2005 Singapore GDP was $215 billion, the Sri Lanka $125 billion. And let's go to 2010, and it's 169 versus 364. And now by the time it comes to today numbers, it's 300 billion versus 585 billion US dollars for Singapore. But Singapore has 4 times less people, so per capita is much 4 times higher. Oh, let's go back here. So let me try it. Okay, so let's stop here. So as you could see, 1980 to 85, kind of same. GDP is the same, but this is deceiving because Singapore has only 5 million people. Sri Lanka has 20 million people. So at that time, also Sri Lanka had 4 times more people. So even in 1980, Sri Lanka and Singapore had the same GDP, but they had less people, so their per capita is 4 times higher. So it was a rich country to begin with, from 1980. And then probably 1990s, they broke away. And this is the time period that the Tamil War, LTT War, started in a big way. So the Sri Lanka was held up. And as you could see, 2009, the LTT War was ended, and you could see the gradient increasing. So by this kind of LTT effect was kind of dying out like this area. So you could see gradually GDP gradient is going up a little bit after the war is over. Now, if there is no war, I would predict a line, something like that. So probably we are looking at 450, $500 billion. But remember, Singapore has only 4 times less people. So their number should be way high if you adjust based on the people per person. So that's a good chart to look at it. And we would look at, so remember this chart that I showed. And remember that, Singapore didn't have that kind of war or, bad minorities playing havoc. And now we are going to look at the exports. Let's copy this link here, and we are going to see, this is a very interesting document, and this is country. This is United Kingdom. Let me get to Singapore here. This is very, very interesting. It gives us a lot of information. Singapore. And so let me adjust this. And so you could see these are the exports of Singapore. They export 41% of their exports on mechanical and electrical goods. 41%. There will be 100. This is imports. So let me get to exports here. Okay. So now 44% is mechanical electrical exports. That's $183 billion they export mechanical and electrical stuff. And then they export fuels. what they do is they don't have oil in their country, so they buy crude oil, which is non-refined oil, and they refine it. They got a whole lot of refineries, and they make $54 billion on that foreign currency. And remember, some of it goes back to buying crude oil. So, and that's a big number. In mechanical electrical, they do IC chips, integrated circuit chips, various computer chips, and various other high-tech stuff. So that's $183 billion. And chemical, they do chemical, they have chemical refineries, etc. That's $43 billion. And the miscellaneous, stone and glass. Stone is basically gemstones, and they buy it and they cut it. And transportation items and metals. And so anyway, the takeaway from this is that their big exports come from mechanical and electrical items, IC chips, oil refineries. They buy oil, crude oil, and refine it and send it back. Chemicals, they manufacture chemicals. And these are the three big items. You don't see them selling vegetables, do you? Tea, rubber? No. Paul? No. They don't do that. Now we go to Sri Lanka exports. And you're going to see a whole different situation. It clearly see it's another world. Okay, these are the exports of Sri Lanka, and 44% is textile and clothing, and that would be $5 billion. And vegetable exports, $2 billion. Mechanical and electrical, it's not even $1 billion. Food products, fuels, there's some fuel. We refine and send out stone and glass, animals, plastic and rubber, not even $1 billion. So the total is very small. Total is, I don't know, it's $5 billion here. Vegetables 2, that's 7. Mechanical, electrical, not half, 7.5. Food products, another half, 8, 10, probably like $10 billion. Remember that number, $10 billion total number. And if you take Singapore, for that matter, you're going to see, I want to check Singapore again. Let's go here. And Singapore, mechanical, electric, $169 billion. Just mechanical, electrical alone. How much was the total exports for Sri Lanka? $10 billion. Mechanical, electrical, $169 billion. $49 billion miscellaneous, fuels, $47 billion. Sri Lanka total is $10 billion. Chemicals, $36 billion. So chemicals, and they do a lot of this gold and things like that. They buy unprocessed gold and they make it 22 karat gold, 24 karat gold. They make a lot of money on that. And fuels, they buy crude oil and refine and send it back, and they make $47 billion on that. How much is the profits? I don't know, but it's a big number. Now, total exports of Sri Lanka is only 10 billion. Only 10. Remember that number, 10. Here 47. Here 169. Here 49. Here 36. So their exports are way high. Now, remember, their exports comes from this mechanical, electrical stuff, mostly computer related. Motherboards, chips, things like that, computer chips. This is going to be in the future. This is going to be heavily competitive area. So Singapore going to be in trouble unless they make a change, because most countries are now have people gradually learning these things, and pretty soon they will be making chips and IC boards and all that, and there's going to be highly competitive area. And the fears also same thing. The problem is oil is going to go down little by little, and oil use is going to go down, and there's going to be solar power and all that stuff. So they're going to be in trouble here. They're going to be in trouble here in the future. Chemicals, I don't know. I mean, they are doing something right in a small country. They have so many chemical plants, and but these two big areas in the future, I feel they would be having. This area definitely feels oil. There's not much future for that. I mean, oil will be around for a long time, but it's going to be less and less. Remember, oil prices went to zero sometime back. And mechanical and electrical, also there's going to be heavy competition. And we have to see how they're going to make changes to these areas, because their margins are going to crack and going to be smaller and smaller. So that is the export comparison. And as I said, now how did Singapore became a oil refinery, and then this would be due to their location, because their location is let's see here. I found, okay, let's look at the location of Singapore. And this is here, okay. I'm trying to get this here, okay. So now, if you see here, this is the oil route, and basically they make it bigger. Okay, now I think you could see. So the oil route, oil comes from the Middle East, goes like that, Malacca, and it goes like that. And there's not really reason for most of the tankers to stop in Sri Lanka. And let me get another one, better one. This one here. It's another oil route. And all these this is the Sea of Malacca. I'm going to show you. This is the Sea of Malacca here. All the oil tankers going to China, Japan, Korea has to go through here, Singapore. So what they did was, due to that reason, they said, all right, all this oil going from here, why don't we just buy that crude oil and refine it and sell it back, keep a profit and sell it back. That's how they start making money. And I believe for their luck, the OPEC came around. OPEC was the Organization of Petroleum Exporting Countries, and they came around, and the oil prices skyrocketed, and their margins went up, and Singapore made a ton of money from oil in 1980s, 70s, etc. So they made a lot of money, and that's purely luck. OPEC was, Russia and USA were totally against OPEC, and the whole Europe, Russia, and USA were against OPEC, because they're all oil consumers. And Russia is a producer too, but they didn't want OPEC. They want to sell their own oil. So all these forces were trying to break up OPEC, but OPEC survived. And if OPEC did not survive, oil prices would have plummeted. And today OPEC was broken up, basically. And Singapore would not be making all that ton of cash. So there is a luck element there, obviously. Now, also regarding the computers, nobody knew that computers are going to be like personal computers. I mean, at that time, there was no real indication that the computers would be widespread as today. I mean, always knew that computers would be around, not like cheap and everybody's using, So they were double lucky it happened that way. So they were positioned well on two areas, computer chip and computer products and oil, which the world went in behalf of them. So I believe there's a lot of luck involved for Singapore. So as I said, the Strait of Malacca is where all the oil goes around. But there are other factors too. Ease of doing business in Singapore. Let's look at that one here. That's definitely something, going for Singapore. And this is the ease of doing business, economic ranking. And New Zealand is the number 1 country, ease of doing business. And Singapore is number 2. Someone said that you could start a company in Singapore in 3 hours. Fill the forms and you could, put the money in the bank. But country like Sri Lanka cannot do that because there's terrorists, there's a diaspora, they're trying to create problems. There's this, so basically they don't have the type of problems like Sri Lanka has. We cannot have open banking because the money would flow into the terrorist organizations and they would, all the troubles would start again. And Singapore don't have that problem, so they could open up their banks. And if you go here, Hungary 52, Bulgaria 61, Indonesia 73, Panama, and Sri Lanka is 99 ease of doing business rank. As I said, Sri Lankan banks cannot open up easily. They have to check everything and have limitations due to a terrorist problem, which Singapore don't have. So they could, ease up their, everything and make it easy for people to start businesses. And basically, they don't have the type of people that Sri Lanka have, troublemakers. Sri Lanka had 1970 insurrection, 89 JVP communist, and Tamil problem from 1983 to 2009, and Islamic problem. So a lot of problems, country with a lot of problems. So that's why ease of doing business is very difficult. Mostly it's the capital accumulation that's what Sri Lanka is limiting due to making sure that the money is not going to flow into the wrong hands. So anyway, I'm sure there are other ways that they could raise this number, 99 to, I don't know, around 27 or something. Then that would be better. So that's another issue. And as you could see, Singapore is number 2 in the world. And as I said, so these are the problems. And then Sri Lanka is a big trade union country. And don't forget, people in Singapore are hardworking and everything. I've never been there from what I'm hearing. And they don't mind dictatorship. There's a group of people, they don't care about who the leader is. That's not the situation in Sri Lanka. When a leader comes, everybody wants to say bad things about him, whether good or not. They just badmouth him, and we don't want this guy, and won't take all the problems that Sri Lanka have, like for the last 50 years, would be on the new guy. That's pure stupidity. Pure stupidity. So you don't have that kind of situation over there. People say, okay, he's a dictator. I'm having my bread on my table. I don't care whether he's a dictator. That's fine with me. But that's not the case in Sri Lanka, unfortunately. As I said, they don't have bad mind. Now they do. So we have to see how they're going to go forward. As I said, the people in Singapore is okay with a dictator. And that idea. And another thing I want to show is the holidays. Now, if you go here, holidays in Singapore. Okay, so they have public holidays. So they have New Year, Lunar, Good Friday, Labor Day, Idil, Vesak, or two of them here, Idil, another Idil, National Day. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Okay. Now we go to Sri Lanka. These are public holidays in Sri Lanka. So we go to Sri Lanka. Now we are going to go here, and we have Tamil 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. 25 holidays, and I'm sure you missed this bunch of them missed here, like official, half official holidays. So probably looking like 30 holidays, a lot of sick leave, a lot of this, a lot of that. So this is a lazy country, by looking at the numbers. This is not a country that is working. There's a lot of holidays, there's no efficiency. There are a lot of work to be done if any leader wants to. It's not just English. It's not just English. English is just because you study English, farmer, there are 25% of the population is farmers in Sri Lanka. If you teach them English, what do they do their palkavi in English, and then suddenly their production is going to go up. It doesn't work that way. As I said, the Caribbean countries, their first language is English. Now, I don't know whether I hit all the issues here, that all the factors. I probably didn't. And if you think that there are other factors involved while Singapore is a rich country, please write in the comment section. So the nutshell is, my opinion is that they had a lot of luck in case of oil, the oil prices going up. It didn't have to happen that way. When the OPEC came around, USA, Europe, Russia, for different reasons, Russia, of course, US and Europe are consumers, mostly. And they wanted OPEC out. They were doing all kinds of stuff, killing people, I don't know, CIA. And OPEC survived. And OPEC did not survive. The oil prices would not go up, and Singapore would not make all that ton of cash that they made using oil refineries. So that was pure luck. And also computers. Who would have thought computers would be prominent and common like today from 1970s? But they positioned themselves, and they probably, Lee Kuan Yew made a guess saying that, let's have a lot of IC chip companies, let's, and see what happened. And bingo, the computers became a big item, and they made a ton of cash on that. And once you make money on that, once you have that money, then you could expand into other things like chemicals and etc. Now going forward, their money on oil refineries is going to come down because the oil prices are down, oil consumption is down, and there's going to be a lot of competition for IC chips because other countries, people are going to college and learning these things. And of course, Singapore can stay ahead, but their margins are going to go down a lot. So I think there's going to be a lot of trouble within the next 20 years for Singapore unless they make serious changes. And the other thing I want to show is the stock market. So let's see, this is the Singapore stock market. Let's see the market cap. So if you go here, the Singapore stock market, and not that one, Singapore stock market. So if you go here, Singapore Exchange, and their market cap is Singapore stock market. I'm trying to find their market cap. Singapore stock market, stock exchange, market cap. And their can't find it here. The stock market cap is, I don't see that here. I'll try to find it. But anyway, their market cap is like 100 times the market cap of Sri Lankan stock market. It's a huge stock market, and it's among the people too. So there are a lot of things. So summarizing, you could say that they're open for business, and they had some luck in the past with the oil and IC chips, and so there are a lot of factors. It's just one factor. And going forward, I personally think they're going to have some trouble if they stay the course the way they are, unless they make severe changes. And those are the factors that I found, and I'm sure there are others too. Thank you very much for listening.